You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 3rd day of October, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Speaking of Thursday, every Thursday night at 8 p.m. Eastern, we have our members-only workshop. If you've been on the trial for the past week, you should have gotten an email yesterday, and you'll probably get another one today that gives you specific instructions on how you can become a member. And when you do, you'll get an invitation to participate in tonight's members only workshop. We do 2 live broadcasts every trading day. First one, that's our live training room. However, that broadcast is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a link, 5-day free trial, no credit card required. Click that purple button, fill out the registration form, hit submit. We will get your desktop set up today. We'll get your indicators indicating today. And then your trial will officially begin tomorrow, which is a Friday. So you might be thinking, boy, I better wait till Monday. No, don't do that. If you take action today, not only will you begin your trial tomorrow, Friday, but the weekend doesn't count against you, which gives you a couple days to get familiar with the indicators. Then the markets open Sunday night at 6 p.m. Eastern. That's when we go to work. Not Monday morning at 9:30 a.m. Eastern. Sunday night at 6 p.m. Eastern. That's when the Globex opens. And then you'll have all next week, Monday through Friday. Did I just turn a 5-day free trial into an 8-day free trial? I think I did. mytradingiq.com, top of the page, click the link, follow the instructions. Now, after the live training room ends, that's 2 hours every trading day. When the live training room ends, we take a 30-minute break and come back for the afternoon broadcast, this broadcast, which is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen is every trading day going forward, you'll get an email about an hour before this broadcast starts. In that email, there's a link. at 12 noon Eastern. All you have to do is click the link in the email, and it will automatically log you into our platform. Benefit of that is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but just pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. You get the idea. You'll see right before your eyes how we've evolved from where we were to where we are. youtube.com/CFRN. Now, we had a hiccup in our daily schedule yesterday, but we're back on track today for a regular day. We'll start with our daily devotional, a word of prayer, a little bit of news, a recap of the logic and concierge alerts. Michael will join us about 50 minutes into the broadcast, give us a recap of everything that happened this morning in the live training room. And then we'll go live on the TradingView platform for about 30 minutes, do some live trading. And then I'll wrap things up with our good word for the day. So let's get cracking. Now, the topic of this week's devotion, and it'll carry over into a couple days next week, divine direction. Talked about stop, we've talked about stay. Today we'll talk about go. Our scripture today is Genesis 12, verses 1 through 6. I'm going to share with you from the Message translation. God told Abram, leave your country, your family, and your father's home for a land that I will show you. I'll make you a great nation and bless you. I'll make you famous. You'll be a blessing. I'll bless those who bless you. Those who curse you, I'll curse. All the families of the earth will be blessed through. So Abram left just as God said, and Lot left with him. Abram was 75 years old when he left Haran. Abram took his wife Sarai and his nephew Lot with him, along with all the possessions and people they had gotten in Haran, and set out for the land of Canaan, and arrived there safe and sound. Abram passed through the country as far as Shechem and the oak of Moreh. At that time, Canaanites occupied the land. So again, we've talked about stop, stay, And today our divine direction is go. Do you sense something new happening in your life? Or maybe you want something different. Even if you don't feel it now, it's always a good idea. Keep your heart prepared for change because it's a guarantee. We've talked about start, stop, and stay. Sometimes the best decision you can make is finding God's direction to go. Often we're called to stand our ground while the pressure mounts, but many times we need to take a risk. Do you feel restless where you are? God may have planted a divine desire in you to serve Him in some surprising way. Maybe He's inspired you with a specific group of people, an idea, a problem, or a place. Maybe He's calling you to go. Follow that hunch and see where it takes you. Embrace the adventure. The best way to make a leap of faith is to get a good running start. There's a great story in the Old Testament about Abram and Sarai, later renamed Abraham and Sarah, that illustrates go perfectly. As we just read in Genesis 12, God spoke to Abram. At the time, Abram was living in a town called Haran, but he was from a city called Ur of the Chaldeans. Back in Abram's hometown of Ur, the people worshipped a false moon god named Nanar. What's significant is that the one true God chose to reveal himself to Abram. God gave Abram a very simple and direct command. Walk away from everything you've ever known. Imagine you getting a command like that. Leave your country, your people, your father's household, and go to the land I will show you. To go somewhere else, you have to leave where you are. You have to leave what's known, what's comfortable, what's predictable, and what's easy. To step towards your destiny, you may have to step away from your security. Who knows where God will take your story if you just let Him. One day, years from now, you'll look back on your life and see the whole story. What's it going to be? I felt like God was calling me, but I was afraid, so I did nothing. Or you will have a faith-filled adventure to tell. The difference is whether or not you go when God says go. Ask yourself this: what is God calling me to leave? It may not be a place, it could be a thing, it could be a person, a relationship, a job. Bigger question: where is He calling me to go? Ask Him in prayer, and then listen for the answer. Too often in prayer, we bend our knee, we say a few words, and we get up and go without waiting for the answer. Sometimes God's answer doesn't come in the instant you ask. Sometimes it's days, weeks, months, or in the case of Abram, years. Is it worth the wait? I guess you have to decide. Join me in a word of prayer. Heavenly Father, just as you called Abraham to step out in faith to a new land, we pray for the courage to trust you in uncertain times. You promise to bless him and make him a blessing to the nations. And we ask for your blessings and guidance upon our nation and the world. Father, we lift up the Middle East, where conflict rages and innocent lives are at risk. We ask for your peace to reign in this war-torn region, for comfort to those who are suffering, and for justice to prevail. Bring wisdom to leaders on all sides, and soften hearts so that peace can be achieved. And here at home, as the presidential elections draw near, we ask for discernment and wisdom for every voter. Help us to seek leaders who will act justly, love mercy, and walk humbly with you. May your truth guide us and protect us from division and strife. Place our trust in you, believing that you are sovereign and will guide us according to your perfect plan. It's in Jesus' name, believe and pray. And everybody said, amen. Amen, and happy Thursday. Again, another quick reminder, members workshop tonight, 8 p.m. Eastern. Members, have your questions ready. And for those who've been on the trial, take advantage of that email you received so that you can become a member and be in the members only workshop tonight. Let me give you the numbers from around the world. We'll start here in the US with the cash markets, or the indices as they're called. Currently the Dow is down 110 points. The NASDAQ is up 21. S&P 500 down 1.5. Make that 2. The Russell 2000, our man in the street, is down 9. Some pretty quiet sideways trade as we head into the high impact news we have tomorrow morning. In the commodity basket, crude oil up $3.11, trading 72 or 73.28 last. That's a gain of 4.5%. That's huge. That's $3,200 per contract traded. Gold's up $1.30, trading 26.71 last. Silver up 22 cents, trading 32.14 last. In the Asian markets at the close, the Nikkei posted another gain of 743 points, which is almost 2%. The Shanghai gained 248 points, which is over 8%. The Shanghai has been absolutely on fire. But the Hang Seng fell 330 points, which is 1.5%. That gave us a mixed day in Asia. It was a red day for the UK. And it's a mixed radio Thursday here in the US of A. We got 3 of the major indices in the red, not by a lot, but they are red at the moment. The only one in the green is the NASDAQ by 22 points. Now we're going to look at the charts in a few minutes, but I'm going to assume the path of least resistance is to the downside. Let's take a look at some news. We'll start globally and go to the markets. Actually, this first article has to do with both. Leading artificial intelligence startup OpenAI raised $6.6 billion in the largest venture capital round in history, doubling its valuation to $157 billion. Thrive Capital led the round with $1 billion, alongside Microsoft, Nvidia, SoftBank, and more. The funds are contingent upon the company's transition from a nonprofit to a for-profit entity within 2 years. Investors were also asked to avoid funding major rivals in the industry. Somebody's stacking the deck here. Fundraising round comes amid departures of high-profile executives in recent months and continued tumult over the direction of the company. Launched in 2015 as a nonprofit focused on researching general artificial intelligence, the company has shifted toward designing and launching products since its groundbreaking release of ChatGPT in November of 2022. Former employees have cited safety issues. OpenAI's newest AI models as a major source of division within the company. ChatGPT claims over 250 million monthly users and 10 million paid subscribers at an annual revenue of $4 billion amid billions in losses. I'm always amazed at how these companies without a profit can get more money and more money and more money. Right now in the world, you could have a great idea for some kind of small business, a hot dog stand. You've already been to the city, you've secured a permit right outside the major ballpark in your city, if you have one. We're not talking about a lot of money. For $5,000, you can open a deluxe hot dog cart with all the trimmings. So while artificial intelligence can attract big money, small businesses are still struggling. Do you feel like you're getting older? Researchers have identified a gene explaining why mouse brains slowly lose their ability to regenerate neurons as they age. The findings raise hopes for potential treatments that rejuvenate brain cells in humans and slow or even halt some forms of neurodegeneration. As brains age, they may rely on specialized neural stem cells to produce new neurons, a process known as neurogenesis. Over time, these stem cells can become inactive, resulting in cognitive decline and preventing recovery from things like strokes. In the study, researchers used gene editing to search through roughly 23,000 genes and probe their impact on brain aging in mice. Group zeroed in on one specific gene, SLC2A4. Sure you won't remember that, but you heard it here first. Involved in the metabolism of glucose. The findings suggest the presence of glucose around old neural stem cells. They contribute to their inactivity and add to the body of research between metabolism and age-related cognitive decline. Americans spend more every year on ways to lose weight or extend their lifespan than anything else. This is a sector, if you can find the right company, it would probably be like buying Apple when it was $12. I know because I brooded over buying Apple at $12 when I had money to buy it with. I didn't. Now, there'll be a lot of charlatans, a lot of wannabes, a lot of make-believes. You've got to sort out who's the real deal and who isn't. Also in the medical field, a California doctor has pleaded guilty to conspiracy to distribute ketamine to the late actor Matthew Perry. Everybody knows who he is. Friends. One of the most popular TV shows ever. I think it's like neck and neck with Seinfeld. Dr. Mark Chavez is one of the 5 people charged in the Friends actor death. Chavez acknowledges operating a now-defunct ketamine clinic, which he used to sell drug-infused lozenges to Perry's physician. The two allegedly conspired on how much to charge Perry for the hallucinogen, with others, including a friend of the actor and his personal assistant, also charged in the alleged scheme. Ketamine is a Schedule III controlled substance. The levels found in Perry's bloodstream at the time of his death were on par with those used on patients during general anesthesia. There are an estimated 500 to 750 ketamine clinics throughout the U.S., where physicians administer the drug under controlled conditions in most cases to treat depression, anxiety, and pain. Overdose deaths solely from ketamine are rare. Most related deaths are attributed to the drug being combined with other substances. It has been said that Matthew Perry, now he was taking his ketamine by injection. He said, "Give me the big one." Now, anyone that knows anything about hallucinogens, it's a search for God. Whether you were a drunk, crack addict, cocaine addict, a heroin addict. Yes, the substances are addictive, but what gets people into them in the beginning is a search for God. Go to your local bar at 7 a.m. in the morning, or whatever time your jurisdiction allows bars to open. And all those sad sacks sitting around the bar, they just want to get their fix right. They just want to get their head right for the day, right? No, if you drill down, you're actually looking for God. Now you may say that's crazy. That's foolishness. Trust me. Even if you go back to the late 60s, Timothy O'Leary, the electric Kool-Aid acid test, it was all an attempt to be in touch with a higher power. Now, I'm not preaching this from a textbook. I never do. I preach from my own life. The enemy has had thousands of years. You've been on planet Earth, what, 50, 60, 70, 80 years? The enemy has had thousands of years to hone and craft his tools. Here you are, looking for God, and ultimately finding nothing but confusion, heartbreak, and despair. And in many cases, losing everything that means everything to you. I have a friend, a personal friend, who goes to a doctor on a regular basis and gets these ketamine treatments. He says it has helped him a lot. But that's a little different than the Matthew Perry story. He died at home in his hot tub from a quote-unquote ketamine overdose. So, kind of makes you think of Michael Jackson, who had his own private physician, who, as we all know, killed him. His intentions were good, I'm sure. But mammon was a part of the picture. All right, to the markets. U.S. stocks wavered today as the focus tentatively turned back to the economy and the monthly jobs report. Meanwhile, worries over the Middle East conflict rumbled in the background. Some calm has returned to a market rattled by escalating Mideast tensions that have driven sharp gains in oil prices. Israel has yet to launch its promised retaliation to Iran's missile strike on Tuesday, amid efforts by Western and regional leaders to stabilize the situation. Investors are now bracing for the highly anticipated September jobs report due out tomorrow morning at 8:30 a.m. Eastern, after a surprise uptick in private payrolls came alongside signs the labor market is loosening up. Now, with 20 million newcomers in the country, if you buy that, I don't know what to say. I mean, come on. Does it make sense? There's a lot in the world that doesn't make sense today. Moving on to the big dock worker strike, which could mean you don't have any toilet paper or other essentials. Whether it's robots stacking shipping containers or ChatGPT editing a movie script, workers this year are fretting over technology. Dock workers who walked off the job this week over demands for higher pay and a ban on automation mark the latest example of that collective anxiety boiling over. In the absence of workplace policy that balances the rush of technology with job security, expect more labor action to fill the void. Unionized workers are increasingly deciding for themselves how they want tech advancements to play out, rather than fully accepting the whims of their employers. That's true for longshoremen just as it was for Hollywood writers. Just a few days ago, California Governor Gavin Newsom vetoed a high-profile bill that would have been one of the most comprehensive policies around regulating AI in the U.S. Now, if you're a dock worker, do you want to see automation take your job? Of course you don't. But in the interest of commerce and humanity at large, is it better to do a job more effectively at a much lesser cost? That's something you can chew on. From Bloomberg, Iran has rarely looked more on the back foot after weeks of Israeli attacks that degraded its proxies, Hezbollah and Hamas, and Tehran's barrage of some 200 missiles fired at Israel on Tuesday was judged ineffective by the U.S. But those setbacks may have an unintended and dangerous consequence, according to current and former government officials in the U.S., Israel, and the Arab world. They fear that Iran, backed into a corner and feeling more threatened, may speed up its nuclear advances and pursue atomic weapons. That potential possibility, if not probability, brought to you courtesy of our current administration. And 2 administrations ago, where billions of dollars were given to Iran and under the cover of darkness, pallets of cash, no digital transfer of anything, literally pallets of cash. And yet Obama remains one of the most popular figures in the world, while he and the current administration have funded this attack. How anyone can't see that, who cares? And we should all care, because our military has been weakened by the current administration. It's been said, we don't have enough bullets to fight a war. That's been said on our news channels, and you don't think the other guys are listening to what we say? They already know that. It's a very dangerous situation that we're in. I spoke briefly last night in our passport holders discussion group about that very fact. They've been preaching the last days since Paul. But no man knows the hour of the day, hour or the day, that Jesus will return. But I got to think, with all this going on in the world today, God may just be getting a little bit fed up. Last but not least, the Chicago City Council Finance Committee passed a $1.5 billion bond proposal to refinance debt as part of Mayor Brandon Johnson's effort to close back-to-back deficits for the third largest U.S. city. Johnson in mid-September proposed an ordinance to refinance bonds to glean savings that would help close this year's budget gap. The measure will now move to the full City Council for a vote, even after some members raised questions about the details of borrowing. Chicago has some of the strictest gun laws in the country. Now, this isn't a trick question. Where is there more gun violence and death? What city in America holds that title? You guessed it. Chicago. So, I want you to think about that as they come to take your guns. Oprah was so surprised the other day when she learned that Kamala actually owned a gun, or says she owns a gun. I guess it's a matter of public record, so you can figure it out. Let's look at what's happening in the markets. Here's the chart of the S&P 500 E-mini futures daily chart. Now, the S&P is the bellwether, okay? That's why we look at the daily chart of the S&P, because wherever the S&P goes, ultimately the other indices will go there as well. Dow, the Russell, the NQ. Sometimes they get out ahead of the S&P, sometimes they drag behind the S&P. But eventually where the S&P goes, so goes the rest of the markets. Yesterday I talked about blue and climbing being directly above price, and that we should be seeing red and falling pretty soon. If you missed yesterday's broadcast, it's there. Last week we talked about the fact that the black step line was leaning towards blue and climbing, and that once it crosses, we get a retracement to the daily BVC. So today's Thursday, here's Wednesday, here's Tuesday. Sunday night, thanks for mentioning that, Stefan. We said that the 50% Fib retracement would potentially be good support. It was. It gave us a nice bounce. Came back down, tested it again, and this time tested the daily BBC. So we expect this to be support. We expect this to be support. And we're not saying this after the fact. Remember, all of these broadcasts are archived at youtube.com/CFRN. So I'm not talking about woulda, coulda, shoulda. I'm talking about last week we started talking about this very thing, and there it is. It's not magic, it's not voodoo. It's simply knowing how to read a chart. The Logic 247 alerts. That's their purpose. To teach you to learn how to read a chart. Currently, we're in week 322, and over the last 322 weeks, we have issued 17,960 individual handcrafted alerts. I know I say that every day, but I really want you to let that sink in. 17,960. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders. This week, since the markets opened Sunday night at 6 p.m. Eastern, we've issued 29 alerts. This morning when Valerie did the recap at 6:30 a.m. Eastern, we were still waiting on the outcome of 5. Some of those have probably resolved themselves by now. That gave us 24 actionable alerts, of which 4, or 17%, would have been stopped out. Again, based on market structure and that very simple process that we teach all of our passport holders. So, no one will argue that 29 alerts, 17% stopped out. Hey, that's a heck of a deal. Sure. Now, if it were a one-trick pony, that would be not that much of a deal. But we're talking about over 322 weeks. Everybody listening to this broadcast wants to learn how to trade, or is learning how to trade, or has learned how to trade, and want to make sure they're still on the right track. 322 weeks is a pretty long time. Is that 6 years? 6 times 52, I guess. But we've averaged on a weekly basis 20% or less. We're sitting at 17% right now. Yesterday we had 18 actionable alerts. Today we have 24. Okay. Now the purpose of the alerts is not for you to just, oh, I'm going to become a member and trade the alerts so I don't have to learn how to trade. Now, you can do that. We can't stop you. But it's not the purpose. It's not the point. We want you to use the logic alerts to learn how to read a chart. We want you to be able to look at a 30-minute chart and instinctively know what the next high probability move is. If you'll use the logic alerts as they're intended, they will help you accomplish that. Because until you learn to read a chart, it's highly doubtful that you're ever going to successfully trade a chart. Now the logic alerts come out around the clock, 24/7. Futures trade around the clock. We have traders around the globe. So the day session is our night session and vice versa. Concierge trade alerts are different. They don't come out around the clock. They're posted as a static report shortly after the Globex open each evening. Last night they came out right at the open, 6 p.m. Eastern. The Thursday session for those who trade futures began last night at 6 p.m. Eastern. Now, if you're a member or trial member, read all of this information, and whatever you don't understand, ask questions. Every member, every trial member had every one of these targets last night right at the open. Okay? Normally they don't come right at the open. It's usually 6:15, 6:30, 6:45, 7 o'clock. But there's been a couple of nights here lately where I was in a position to deliver them right at the open. Now, the step line cross, price pull back to the VBC, that's what we expect. The green line's the VBC, stands for bull bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. The pullback to the VBC, whether it's from below or above, holds more often than not. But eventually, it will trade through. That keeps the markets fluid and tradable. But once we trade through, we get a retracement, and guess what? The pullback holds. And so here we sit right now on support times 2. 50% fib extension and the daily BBC. Got red and falling overhead. That's important. This is called the CFMA1. I just refer to it as blue and climbing, red and falling. Why? Because when it's blue, price rises. When it's red, price drops. It's not rocket science. So the fact that we're sitting here, now we have support times 2, we got red and falling overhead. And we've got a big red candle. Should we close today below the BBC, ahead of the job numbers tomorrow morning, we could see price quickly drop to the 38% fib extension. Right below that's the 24% fib retracement. And then you've got the bullish cross. That's when the blue line gets above the green line. First time price revisits that area will almost always be good support. All alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's the time frame I chose years ago. It served us well. You don't mess with something if it's not broken. And so, double top. This was the open last night. We ran right up to this high from yesterday. That's resistance. Sent price lower all the way down to the zone below, where we consolidated and then hit the short target. Continued then to consolidate at the short target, and that sent us even lower. But as we've seen happen many days this week, buyers came in before we got to the low of yesterday. And that gave us a leg right up to that short target. What was support came resistance, sent us back down. Buyers came in and drove us up to the weekly trading zone at 57.59/60. Now the weekly trading zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Published the zone since December 14th of 2009. So this December will make 15 years. When price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. As price rallied up today, we found resistance at the zone published Monday morning. Then came the 10 o'clock news event. And I want you to understand this. This 30-minute candle opened right here. And it ran all the way up to here. This high from yesterday. Or early in the session last night. But by the time that 30-minute candle was done, look where price closed. Support sends the market to resistance at the weekly zone. Resistance sends the market looking for support. Got this double bottom right here. We just took that out. And we've got this low put in right after the London Open this morning. And then we have this low put in yesterday. And below that, we've got the lowest weekly zone this week for the ES. Michael's going to give us a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform for a half hour. Then I'll come back. I'll complete the recap of the alerts. And I'll wrap things up with our good word for the day.
Excellent.
Michael, looks good.
Here we are. Great. All right. Good afternoon, everyone. Today is Thursday, the 3rd day of October, 2024. Now, if you have not taken a free trial with us and you want to take a free trial with us, then go here to mytradingIQ.com and click on the purple button right here. Now, the purple button is going to bring you to this registration page. There is no credit card required for the trial. You'll notice that on the registration page. Look, no place to put a credit card. All we ask for is your name, your email, your phone number. Gives you an Ninja Trader machine ID if you have one. Now, if you're not going to use Ninja for charts, we don't really need the machine ID. All right. If you just use Ninja to trade, that's great. Use Ninja to trade. But if you're not using it for charts, we don't need your machine ID. For TradingView, give us your login ID. All right. Now we suggest that you trade on TradingView charts because that's where we have all of our indicators. Trade on TradingView charts, hit the register button, and we'll set up your indicators for you, so they're indicating at the beginning of your trial. Now, I just want to click on one thing here to make it crystal clear how easy it is to get the TradingView charts. All right, let me log off of this for a second. Sign out of that for a second, and show you. If you go here to our webpage, and up at the top, you go to trading platforms. Click on this link right here, this one. Click on that. And right here, this is how easy it is to sign up for the TradingView platform. $0 forever. Sign up. No credit card needed. And that's going to get you a very limited version, but that will get you the login ID that we need to set the indicators up on your desktop. Now, this version will give you limited range bars, but it'll give you all the other kinds of bars. And if you were trading stocks, this is all you need. With that, I think you get real-time data with stocks, with equities. I'm not sure about that, but I think you do. So if you want to get started, $0 forever. No credit card needed for that either. All right. If you want to use custom range bars, then we recommend that you go here, click on the monthly, and start out with the essential package for $14.95 a month. It is free for 30 days, so you don't have to pay for that either. And give us either way, any way you do it, we need your TradingView login ID, and they're going to supply that to you. You have 2 opportunities to change that ID once they supply you with some kind of crazy ID. You have 2 opportunities to change that ID to something that's more familiar to you. Okay, I just wanted to make that clear that it is easy to get TradingView. So it is easy to get started with us. Okay, and now we'll log back in, and we'll go over the results from today. Right, we had a pretty good day today, a little bit better than yesterday. We traded exactly the same number of trades. It took us just a little bit longer to get the goal. Well, it actually took us less time. It took longer yesterday to get the goal for the day. 5 minutes yesterday, 1 minute today. 1 trade today, 2 trades yesterday. But all that stuff it's becoming normal, isn't it? Don't you think? It's becoming normal to get the goal for the day in the first 5 or 10 minutes with 1 or 2 trades. Look at last month. The last 2 weeks of last month, there were only a couple of days that it took more than 3 trades and more than 10 minutes to get the goal for the day. More than 5 minutes.
I read somewhere that many members get their goal in the first 30 minutes of the Wall Street Open.
That is a very true statement. Many members do, and you know, one of the things that people might ask is, well, why haven't we always been doing that? All right, why haven't we always been doing that? What's changed to make it so easy? Well, there's 2 things that have changed. One thing is I started trading at 9:27, not 9:26, not 9:28, 9:27. Just kind of joking about that, but not really. It's not at 9:15 because when I started at 9:15 for a full year and a half, I started at 9:15, and at 9:15 there were a lot of times where I would stop out and then I'd have to recover from it. And it takes a lot longer and a lot more trades to recover from that. Between 9:15 and 9:25, it seemed like I would stop out. So I changed it to start just a little before the open. And 9:27 is the number I landed on. But the results are clear. You know, look at all these 1s and 2s in here. 1s and 2s and 3s and 4s. You don't see any high digits right in there. The number of trades to get the goal. You don't see any big numbers in there. Okay. And when we started doing this, right back here is where we started doing this, right? And we also introduced the TV trades range trigger at the same time. All right, so having that feature, that new tool, coupled with starting at 9:27, gets us, almost always gets us the trade, the goal for the day on the first or second trade, in the first 5 or 10 minutes. And it's because it's so simple. It's actually going at that point at 9:27. The markets are going really slow, so we have time to really do analysis on. If we look at every one of these markets right here, I don't know what it was like on every one of these markets this morning, but I know we got our goal for the day on the NQ. So let's go back to the very beginning here on the NQ. And I know I'm skipping all around with what my normal sequence of things, but that's okay. You guys
Well, something for people to think about, a parallel type of question that you just posed. Why did Queen Isabel send Columbus to America and not the moon? Because the technology had not yet been discovered to do it.
That's right.
That's why I always tell people on our YouTube channel, youtube.com/CFRN, there's over 2,600 daily episodes. So thanks to the power of YouTube, everyone can see exactly how we've evolved over the years.
And
nobody's going to watch them all, but you should watch enough until you understand.
And you can go back and see that, the underlying principles are always the same. We're always buying on pullbacks. We're finding just better technology to identify the best entry point over the years. And, somebody said something to me over the weekend. They sent me an email over the weekend. It was almost like a little nastygram. And it said that, they're never going to pay for a beta to be in a beta because it always seems like they're in a beta. Now, it wasn't so much, the thing is, I'm always learning, and I trade for a living, and I'm always going to try to make what I do better. And as I make it better for me, I make it better for everybody else. So that's better for us. That's better for everybody. And so if you consider yourself in a beta because I'm always learning and I'm always going to try to improve the product, or we're always learning, Dwayne is always learning as well. It's not just me. We're always learning and we're always trying to improve the product. If you consider yourself in a beta because of that, well then, maybe you ought to go do something other than trading. All right. If you have something that is working, I don't recommend you change. Don't look at any of the new stuff that I'm creating. If you have something that's working, then you don't need to change. All right. But I'm trying to create things that are better for me and better for you. And I'm able to do that. I write the code. I'm able to do that. I don't have to switch from indicator to indicator to indicator. I create the indicators. So if you have something that is working, should stick to that and don't do anything different. If you're struggling and I come up with something that makes it easier, like this, cutting it down from everything that we were doing, which working is fine, but cutting it down from that to something that's simpler like this, it's simpler for everybody right now. And, we have guys that have been doing this stuff for a long time that they're liking this even better than what they were doing before, even though they were making money before. They're able to implement this and it's just easier to do. It's all the same principles. We're buying on a pullback. It's just easier to identify the pullback, easier to see the trade come together. That's all I'm trying to make things, we're always trying to make things easier for you guys, the traders. So the fellow that said that, his name was Dan. If you're not willing to learn, then that's okay if you have something that's working for you. But if you have something that's not working for you and you're not willing to learn, well, then you should go do something else completely. Okay. If you have something that's working for you, you don't need to learn. That's good. But if you're here because you have something that's not working for you and you're not willing to learn, then really don't waste our time. Don't waste your time or money, anybody's money.
We have no control over the market itself, nor do we have any control over all the people who scammed you and lied to you in the past, which is why we're so transparent. We do everything just right out in the open. Michael trades live in the live training room every morning in live markets. All of the alerts, logic and concierge, are sent out well ahead of them actually triggering. So you just can't be any more transparent than that.
Yeah, and the guy, the thing that really kind of ticked me off, but because he said I skipped over the losers. I always skip the losing trades and I only show the winning trades. He said if you have a -5 and a -5 and a -5, and then you have a +10, and I just say I only had a +10. Said, well, first of all, I never have a -5. I never have a -5. I don't have any stops that are at -5, so that is never the case. It's possible that I'll have a +10, but I'll never have a -5 unless it's an accident, because my stops are either greater than -5 or they're break even.
It's either a full stop out or it's a break even.
Yeah, full stop out, break even, or positive. Those are the options. But so you can tell that the guy's kind of full of it, and
people send those kind of messages because they've just been lied to and burned so many times. They've reached a point where they don't have it in them to trust anyone anymore. And I understand that.
Yeah, I get that. I get that.
So
But don't lash out
if
at
you
me.
reach the point where you can no longer trust anyone, okay, and we do give a 5-day free trial with no credit card required. And as I said, we have over 2,600 daily episodes of this afternoon broadcast archived. So it's not like what you see today is a one-trick pony. You can see it day after day after day after day after day. It's all archived.
It is. It is. We record almost everything we do in some form, sometimes in 2 or 3 different forms. And I don't know. Okay, well, sorry, I got totally sidetracked and went down a rabbit hole. I did that yesterday too. I'm sorry about that. Where was I? I was still in the recap. I was still going over this. All right, so today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We had a pretty good day today. We had 101 ticks on the NQ, 10 ticks on the Russell, 65 ticks on the YM, and we lost 2 on the S. We're back and forth on the S a little bit. We started out with a +6, then we had a stop out of -10, then we had a +12, then we had a -10. So we had 2 stop outs on the S today. If I go through, I mean, I will go through every trade with you, but I can just tell you right now on the NQ, we had a +48, then I kind of screwed up a trade and we had a -7. And then we had a +48 again, then -36, then +48 again. That's what we had on the NQ today. And so we had a couple of stop outs on the NQ. We had a couple of stop outs on the S. On the YM, we were all positive on the M, +20. Then we went from 20 to 35 to 45 to 65. And on the Russell, we had a couple of break evens and +10. That was our whole day. But we'll go through and look at them all, because I think it's worth doing. So we ended up with 101 on the NQ, 10 on the Russell, 65 on the YM, and -2 on the ES, $855 with 1 contract this morning. Today took 1 minute and 1 trade to get to this number. Now that was 48 ticks on the NQ. That's how we got that. All right. And so we took a total of 17 trades this morning. And on the month, we're now at 39.92 over 3 days, averaging 13.30 per day. And on the year, we're at 90,130. Over 186 days, averaging $484 per contract per morning session. And the person even said something about this. When I go through the spreadsheet, they said that I should say the full number of hours that I trade every day. Even if I'm not placing trades, it should not be just the time in trades. It should be all the time that I'm sitting there at my computer placing trades. Because if I sit in my computer for 8 hours a day, that means that's 8 hours of my time spent trading. Those were the words. And those words couldn't be any less true. What this is all about is the amount of time that it takes from the moment that I start talking in the room. That's when I open the room up and I start talking. From the moment that I start talking until the moment that I get the goal for the day. That is what this is about. It's not about the amount of time that I spend trading. It's about the amount of time I spend trading getting the goal. And the rest of it, you could say 186 days. The room was open for 2 hours. You could double that and say 186 times 2 is whatever, and it comes out to like $240 an hour for 1 contract for the whole day, for the whole year is what it comes out to. You could say that, and that's a lot less than $2,581 an hour. But this is quitting when you get the goal for the day, adding 1 contract a month, quitting when you get the goal for the day. All right. If you were to do that, average it over here, it would be for 1 contract the whole year. If you were to do it for the whole thing, adding 1 contract a month, then it'd be a different number. All right. You'd be adding up all of this divided by that times 2. And that puts you pretty close to this. It's going to be less than this, but it'll be pretty close to that. So, I try to be as transparent and accurate as I can with everything that I do, especially with the spreadsheet, because that is a living document. It's over a decade old, and I really don't want to screw that up. And me going through the spreadsheet every day is also documented. Every day, recorded and documented for years. 2,000 episodes, right, Dwayne? From the beginning of it anyway, all the way back to 2013, I think. Anyway, so here I am going down a rabbit hole again. So far in the year, if you quit trading when you got your goal for the day and you added 1 contract a month, you'd be at 10 contracts right now, and you'd be averaging $2,581 an hour. You would have worked 54.21 hours, and that's it for the year. All right. So let's get in there and play some trades. This is the ES. Now, I don't remember why I was stuck there on the ES, but in tonight's meeting, I have some stuff. Let's go all the way to the end like that. Okay. Oop. It dropped down quite a bit there. All right, so you can't see all 4 lines in a ribbon right here, so I'm not gonna. Oh, wait, you can't see it right there. No, now you can. So it's a possible trade right there. Okay, on the NQ because it just broke up to see you can see all 4 lines. Now this is obviously a pullback on a move down, so I don't really see it going too far right here. It might go up to the prior swing high, it might not. This last pull out of the oversold right here was not a valid trade. So this is a valid trade because it just spread out the lines just enough. Now, one of the things I was saying this morning is if you wait for the easy and obvious, okay, wait for the easy and obvious. This is not easy and obvious. It's a trade, but it's not an easy and obvious trade. But if you wait for the easy and obvious, which is something like this one right over here, where the trend is clear, I'm locking 16 ticks on that. And we just got all 48 ticks on that. But if you wait for something like this is becoming easy and obvious right now. It's not quite there yet. Something like this. Just wait for the easy and obvious trades where the trend is clear. You can clearly see all 4 lines in ribbon. Price does not have to pull back and touch the ribbon, all right? But you have to be able to see all 4 lines in a ribbon. If you see that and you come out of the overbought, or you see that you come out of the oversold, it's an easy and obvious trade for you to take. If it's not clear, like right in here, it's not clear right in there. It's not clear right in here. Right here, this is okay. It's pretty easy and obvious to see it right there. Right here and right here, pretty easy, right? Right here, you can see all that. In here, it's not easy and obvious. Right here, pretty easy and obvious. You didn't have a trade there, but if you did, it was actually right here. This is where it would have been, and that would have stopped you out. But if you just wait for the easy and obvious, and you quit trading when you get the goal for the day, then there's no reason you shouldn't be able to do this and get these kind of results down here. This is quitting when I get the goal for the day. Starting with one contract and stopping when I get the goal for the day. I mean, it's not 1.3 million, it's 139,000, 140,000. But it's only trading 54 hours on the year. Do the math on that. 139,000 divided by 54. It's right here. It's already done. But that's pretty darn good money, and you can go and do the rest of your life. You don't have to spend all day trading. All right, so let's go back here. We got 48 ticks on this one right here. Now it's pulled back. It's not in the oversold, but this would be an easy, obvious trade, wouldn't it? Wouldn't it? It would. This over here would be an easy and obvious trade. This right here on the YM. It's not now because you didn't get a lower swing off of this, but if you did get a lower swing here, then this would be an easy and obvious trade. All right, but back here, this was an easy and obvious trade. Here we are. We're oversold. We're ready to go. So take your DOM over, add 8 to the bottom of the bar. Bottom of the bar is right here at 1175. Now the bottom, see, it's not as easy and obvious right now. 909, add 8 to that. It's going to be 17 right there. Oops, right there. Okay. Is that 875 or is it 9? I think it's 9. Yeah, the low's at 9 right there. So 17. That's it. Easy and obvious. When it closes up, it's going to spread those out. If this closes down, it's going to squish them together too much. Okay. And so now you're looking at 906. If you add 8 to that, you're looking at 1450 now. Okay. 6 1/4, looking at 14 1/4. I think that's right. Oh, 6 1/2. Okay, so you're looking at 14 1/2. I'm looking right here at the low, right up there. I know you can't really see it because the table's in the way, but if I blow this up, then you can see it over here a little bit better. Oops, I blew up the wrong one. If I blow this up, you can see it over here a little bit better. You see the low right there is 6 1/2. So add 8 to the low of that bar. If it closes up, it's going to spread those out and you'll have all 4 lines visible. It'll come out of the oversold. If it doesn't close up, it's not going to be a trade. Right? It's as simple as that. As simple as that. So that's what we're waiting for right now. there it is. Got the up close, gave me a little slippage, but we're in the trade. It's got a 36 tick stop. It should be 36. It is 36. Okay. I have a 36 tick stop. It looks like it's going to take me out. And it might. If it does, it does. Yeah, but this is why you stop trading when you get the goal for the day. I had 48 ticks on that trade right there, that one before it. And that's why you stop trading when you get the goal for the day. So now between the two trades, I'm plus 12 ticks, which is almost the goal for the day overall. That wasn't as easy and obvious, though, was it? Because everything changed to red. It wasn't as easy and obvious as this right here, or that, or this. But that's all you have to do. Just wait for the trade. The 100 tick range is setting up on the NQ. Well, let's go look at that. What time is it? 1:16. Okay. Just want to see how much time we have left in here. Now, the thing with the 100 range is when you get a trigger like this one just is right here, usually the trigger is going to be your pivot bar. So now the thing about this is the stop has to be just a little bit above the bar that got you into the trade. So you'd have like 110 tick stop on this. Now that would be $550 with one contract for the NQ. Right, it'd be $550 with one contract. If that's too much money for you and you want to cut that in half or cut that into a fifth and make it $110, to make that $110 risk, trade 2 micros. Right? If you trade 2 micros, then that 110 tick stop is going to be $110. And you anticipate that it's going to get down to this prior swing low. So the entry point would have been right in here at 5.5. And you're anticipating it's going to go at least all the way down here to 80.25. So that's actually 25. This is 100 points. I mean, 100 ticks from here down to here is a little better than 100 ticks. And your stop would be a little better than 100 ticks right here. But if you use the leg lengths, and the leg lengths work the same way with a larger time frame as they do with a smaller time frame. If you use the leg length and you're anticipating that this is the leg length you're going to get from this right here, then that's going to put you down here right at the midpoint, exactly at the midpoint. Now that is symmetry right there. It'll put you exactly at the midpoint. And, and that midpoint is down at 8, let's say it's at 860, all right? 860. So your entry is up here. So that's 100 and, I'm sorry, 860, that's 40 points, right? 40 points, 160 ticks from here down to here. So you'd be risking 110 to get 160. That seems like a pretty good deal, doesn't it? And you see, when you use these 100 range ones, James, when you use 100 range, a lot of times it's going to pull back a little bit before it makes a push down. So you don't necessarily have to have your order waiting there for the down close. You know, usually on 100 range, it's going to pull back like probably 10 ticks or 15 ticks before it pushes down. So as long as you have the alert set, and you saw the alert show over here a few minutes ago, the alert was right in here. It was on the MNQ that the alert happened. Okay, I guess it happened right here too. Look at the log. There it was right here. MNQ, NQ plus 85. That was this right here, letting you know that it got up into the overbought. So it was telling you to pay attention because it got up into the overbought. That's what that alert was saying right there. And so you, at that point, you know to pay attention and start looking for the down close. The down close happens. You know, then you just have to put the order on. Like right now, I could go short right now and feel pretty comfortable that it's going to make it down to here. All right, if I shorted right now, I wouldn't need the whole 110 tick stop either. I just need to be up here above this, maybe 10 ticks above there. So where is price right now? Price is at 9. Let's say it's at 910 right now. So my stop would have to be about 9. Well, what's the top of this bar? Is it 930? The stop would have to be at 940. So you'd have to have well, the stop wouldn't have to be that big. 914, the stop would have to be up above this prior swing high. So it'd be about a 15, 16 point stop. So that's not 100 ticks, right? It'd be a 15, 16 point stop, 60, 70 ticks. So you're risking a little bit less for the same gain right now. Okay, because on 100 range, every time you get a pull out of the overbought or oversold with the trend, it should be the pivot bar, like this last one right here. It should be the pivot bar. And if it's not, usually it's going to go enough into profit to get your stop to break even. It's not going to happen very often where it's just going to stop right there and pull back up. It looks like it could do that right now, but it's not very often that it does do that. Okay, usually it's going to push down and make its way down to satisfy the leg length and hit the prior swing low at the very least. All right. So like right now, you could jump into the same trade right now. If you didn't get into it yet, you could jump into the same trade right now for like 10 points of risk, or maybe even less than that, and potentially have a 200 tick trade on your hands right here. You'd be risking 50 roughly, 40 or 50 to make 200. If it does pull all the way back up and hit the ribbon, which would be equal to this pullback right here, there's a little bit of symmetry in that too. So you could have your stop beyond the ribbon, but that's a stretch. Anyway, let's go back in here and see what it gave us in here on the 31 range, which is my happy place. We really didn't give us anything in here on the 31 range. This is showing the pullback right here. It's showing the pullback after the legs down. Okay, so that one that I did take a few minutes ago and I stopped out on, where was that? That was right here, wasn't it? Somewhere. I don't know where it was. Anyway, trade what's in front of you. The Russell right here is looking pretty good. A down close here on the Russell would be a nice trade. And that, because the Russell's on a 19 range, right? The reason I put the Russell on a 19 range and the YM on 19 range is because they're base 10. So if you do it at 9 or 19, then it's multiples of 10 that's going to get you where you want your buy or sell stop limit order. It's like right here, 94.5 minus 20, because it's 19 minus 20. It's going to get your order exactly where you want it. All right, so it'd be 19.5 minus 20, it'd be 90. No, it'd be 4.5. You just look at it that way. 4.5 minus 20 is going to put you down at 2.5 right there. 20 ticks away. That's because the bar, given where the high of the bar is, the low of the bar is going to be right here. It's going to close right there at 92.6. And if it does, it's going to satisfy the trade setup and it's going to fill me right there. Right now, the high of the bar just went up a little bit to 0.8. So I'm going to bump this up to 0.8. Okay, so you're looking right here now. The high of the bar is now still at 0.8. I gotta find my down. Hang on a sec. I've got to get that down back. Here it is over here. Okay, let me click that. So here it is right here. 95.5. Subtract 20 from that. 5.5 down to 3.5. Okay. Now you see the color change. It's not the easy and obvious anymore, but it's still a valid trade. Did this make it up on the 100 range? Did it make it up to the BBC? I don't want to just skip over that. Yeah, it made it up to the BBC. It actually went up higher than I thought it was going to. So that would have stopped you out right there. No question. That would have stopped you out. Let's go back to the 31 range. And so over here, the high of the bar is at 95.5. So that is 20 ticks away from the top. So the bottom of the bar is going to be right here if it closes down. Given what we know right now, bottom of the bar will be right here at 3.6. So we'll trigger in right here at 3.5 or 3.4 probably. Okay, given what we know right now. And that'll be a valid trade setup. All right. Now, over here, the way the ES is coming together is kind of ugly. I'd really rather see a couple of down closes. A couple of down closes. All right, this is okay the way that it is, because now it's going to have to take a couple of down closes to get it into the oversold. So this is all right the way it's coming together. Over here on the NQ right now, we are in the oversold. We need an up close on the NQ. That's got a low of 47. It's going to be 55 is what you're looking at on the up close on that. 55, 8 points above the bottom of the bar. Okay. All right, we triggered in over here on the Russell. It did give me one tick slip. The ES is pulled back. It's in a position to have a long trade, and that looks pretty good. The NQ is pulled back, it's in position to have a long trade, and that looks good too. Okay, so this needs to go 10 ticks in a profit above the stop to break even. This needs to give us an up close, be 37 up to 45 and a quarter. 40, is that right? Yeah, right there, 45 and a quarter is where it would be. And the ES is also giving a trade right there. So we're getting trades all over the place here right now. Okay. The Russell's not looking so good, but the ES is. I'm throwing my stop at break even on the ES, and I just got 48 ticks. Oh, actually, I should get the whole. I didn't get the whole 48. Then I just got all 48 ticks on. I'm still long on this. Am I still long on this? Okay, well, I'm in down here at 51.25, so I'm going to lock in right there. That's 10 points. That's 40. All right, now I'm out. I'm out of that. So the ES is starting to run right here. I'm going to lock in 8 ticks on the ES. 12 ticks on the ES. Wow. Yeah, okay. That's minute 37. That's 20. I don't know where this is going, but I think it's going to go up to the next weekly trading. So we have 20 ticks locked in right here on the ES with 5 points. All right, we're out with 5 points on the ES, and we'll have to go see what we got on the NQ. I'm not exactly sure what we got on the NQ. We stopped out on the Russell. The Russell was minus 25. Let me go and get those prints for you, and I'll tell you exactly what happened with that NQ trade. Okay, so the last NQ trades are right here. The ES was good. The NQ bought. Yeah, we got just the 48 ticks on the NQ. I'll show you. Hang on. For some reason, it looked like it was going more than 48 ticks to me. I don't know why. But here it was. We bought here at 47.5 and we sold at 59.5. And I missed the follow-up trade here on the NQ. But so we stopped out on the Russell. The Russell, again, that wasn't the easy and obvious trade right there because it changed color in there. But it is what it is. Let's see. Let me hit cancel on that and move that over. And so now we're oversold again here. We're getting in the oversold here. We're getting in the oversold here. Yeah. Oops. What time is it? 1:28. All right. So almost out of time. Almost out of time. This right now is down here at 59.75. Let's drop it down a little bit further here. All right, so everything's pulling back right now. It's retracing 100% retracement of that last move up. So we don't have any trades going on right here right now. So I'm probably gonna I have 1 minute left in here. I don't think we're gonna get any more trades. So far we've had 1 stop out, 2 plus 48s, 1 minus 36 over here, a plus 20 on the ES, a minus 25 on the Russell, and I think that's all the trades, right? Isn't it? And how did this look on the 100 range, James? All right, it just got messy in here. That's all it did. This didn't put in a lower swing, so you wouldn't be considering this. So we had the 1 stop out on that. If you would have taken that, you didn't actually do that one. But all right. Now we wait for another opportunity. But I think I'm going to wrap it up here. Remember, it's partners meeting tonight. It is Thursday partners meeting tonight. If you are not a partner and you want to get into that meeting, you must become a partner before the meeting. All right. You have to be an active partner to be able to get into the meeting tonight.
If you've been on the trial, you should have gotten an email yesterday or today.
You definitely got one yesterday if you've been on the trial, and you'll probably get another one today. So that's all you need. If you are watching in the live stream right now on YouTube or watching here, I think everybody that's watching right now is already partnered. Click on the purple button right here to take the trial. Right, there's no credit card required for the trial. Click on the purple button to take the trial, and that's going to bring you to this page where all we ask for is your name, your email, your phone number, and down here, if you have Ninja and you chart on Ninja, give us your machine ID. If you have Ninja but you're not using the charting stuff that we have for Ninja, then don't bother with machine ID. It doesn't matter. If you have TradingView, give us your TradingView login ID right here. And that's it. All right, that is it. If you do all that, then you will be all set to get your trial going. All right, and that's it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, South Mountain, America's largest city park. Plane is ready.
Yep. Recap of the morning session.
Today it took 1 minute and one trade to get to $2,400. $2,400 today.
Great job.
Thank you. Thank you.
All right, guys, we'll pick up where we left off. The ES, we already covered that. Price, as you can see here, and we've seen this repeatedly this week. Okay, here's yesterday's low. Buyers came in just now, just before yesterday's low. Now we're below the BBC. We've got red and falling overhead, step line. So we've got resistance times 3. So as price rallies its way back up, the highest probability is that we'll get another leg to the downside. However, buyers are convinced enough and we overcome these obstacles, then there's a beautiful opportunity from 57.50 up to 57.55. That gives you 5 points. You only need 2 points to get your goal for the day. On the Dow, here's where we opened last night. Dropped to the BBC. We didn't get a bounce. We consolidated because we had red and falling overhead. Then we got the bearish cross. That took us down to the weekly zone. 42,425 / 42,430. And the low of this candle is 31. So we missed the zone by 1 tick. When price drops to a zone, we expect support. When it moves up to a zone, we expect resistance. So the pullback held. Price always reverts to the mean. In our case, the mean is green. It's called the BBC, stands for bull bear cross. Bullish above it, bearish below it. Now the markets are fractal in nature. Whether it's stocks or futures or crypto or Forex or ETFs. So this BBC, this green line that you see on my chart, you can apply it to a 30-minute chart like we do for the alerts. Or as you saw earlier, daily chart, weekly chart, monthly chart. Remember, institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. Because of their account size and the size they trade in, they're the ones who literally move price. So if you make it part of your daily routine to just spend 2 minutes with a daily chart of whatever market you're about to start looking for trades on, it can give you a real good heads up many days on which direction you should be looking for trading opportunities. Not only does it show you what the institutional traders or the deep pockets are doing, but you also see, okay, now, this looks a lot like a woulda, coulda, shoulda thing. But if you'll take the time to go to youtube.com/CFRN and listen to the last week's broadcast, just the very beginning, part where we go to the daily chart, we talked about the step line as it was getting ready to cross blue and climbing, and that once it did, we'd get a retracement to the BBC. We had potential support at the 50% fib extension. We've now consolidated here for 2 days. Blue and climbing has turned to red and falling. So this is now we know the pullback holds more often than it doesn't, whether it pulls from above or from below. Pullback holds more often than not. But this scenario right here tells us that this is a spot where price may trade through the BBC. And if it does, where's your support? Right here and right here, which is basically the 38% fib extension. Then you've got the 24% fib retracement. Now remember, institutional traders are looking at daily, weekly, and monthly charts. So when institutional traders see price hit the 24, that's the shallowest possible fib retracement. Okay? You think there's going to be a bounce? Well, it's a rare time when you hit a fib on a daily chart that you don't get a bounce. Whether it's a bounce up or a bounce down, it just depends on which way price is traveling. Okay? So this number here is extremely important at this point. You've got some intermediate areas, and should we spike the 24% fib retracement, right here where you have the bullish cross where the blue line gets above the green line, that's almost always good support and good for a bounce. So as we've talked about for over a week now, it's almost as if we knew ahead of time what was going to happen. But nobody, not man, not machine, not algorithm, not nothing, not no way, not no how, knows what's going to happen next in the market. It's not possible because there are too many factors, too many traders, too many opinions, too many ideas. Okay? But what you can learn to do as you learn to read the chart, okay, just what we teach you with the Logic 247 alerts, is you can know with a great deal of certainty what the next high probability move is. And we shared it, and shared it, and shared it, and shared it. And now I'm sharing again. If today we can close below the daily BBC, okay, we already got our bounce. It was a nice bounce. The low yesterday was 57.24. The high was 57.73. Today's high, 57.72. So you got a high, you got a lower high, sign of weakness, which increases the probability that price may this time trade through the BBC. Now, once it finds support, whether it's at the 38, 24 retracement, or the bullish cross, that bounce will probably take us back to the BBC. And remember, whether the price pulls up or down to the BBC, pullback holds more often than not. Eventually it will trade through, and I'm thinking, taking all things into consideration, this is a prime opportunity price to trade through. And so you simply have to look left or where the market is likely to find support. And of course, you want to have your fib retracements and your fib extensions, because trust me, all the institutional traders do. Okay? Our strategy, our indicators, they're not designed to outsmart the institutions with their infinite resources, but to help you better understand what they're doing, why they're doing it, where the obstacles are. And then all you have to do is do what they're doing long enough to get your goal for the day and have the discipline to just put the mouse away. Yes, you can go long here. Even though we know from a big picture that it's most probable price is going to trade lower, on smaller time frames, there will be opportunities. You see how we bounced yesterday off the BBC, and even today we've bounced a little bit and we're sitting right on the 50. Just ask yourself, no matter how much you know about trading and how much you know about reading charts, what appears to be right now the path of least resistance. Got red and falling overhead, below the step line. You do have support times 2 here. Could consolidate because we have a huge economic report coming out tomorrow morning at 8:30 a.m. Eastern. And depending upon what that number reads, whether it's true or not, it's going to affect what happens with price. On the Dow, the vertical line on these charts, of course, separate today, Thursday, from Wednesday. And if we scrunch it up, here's Thursday, Wednesday, Tuesday. Back here's Monday. Remember, when price moves up to a zone, we expect resistance. When it drops to a zone, we expect support. This got a little messy. That's okay. This high. See that? Okay. So we opened here last night. We dropped to the BBC, but we had red and falling overhead. So we consolidated for hours. Remember, these are 30-minute candles. Now, I know that in the live training room, you work with 19 tick range charts and 31 tick range charts and 7 tick range charts. But you can't lose the perspective of the larger time frame, because the larger time frame is going to dictate where price goes. So you don't want to get caught in the range vortex. Yes, you want to use the range chart to give you your highest probability, lowest risk trade opportunity. Sometimes on that smaller time frame, you'll have an absolutely perfect and beautiful setup. You can almost hear a hallelujah chorus of angels. Man, there's no way this ain't gonna work. And it doesn't. When that happens, go look at your 30-minute chart. See what obstacle you ran into that you couldn't see on the range chart. You can make a choice, a conscious decision to avoid those trades. Or you can roll the dice and just go with it. It's entirely up to you. It's your trading business. Okay? And it is a business. The 24/20 blueprint helps you write your business plan and your trading plan. 9 out of 10 new traders fail because they don't have a teacher. They also don't have a business plan or a trading plan. They don't even know they need one. I'm telling you, You do. So we opened last night, we come down to the BBC, we got red and falling, we get a bearish cross, red line gets below the green line. And where does that take us? Takes us down to the zone and through the zone to the target. And we continue lower until we reach this low right here from Tuesday. Support will always send the market looking for resistance, which will always send the market looking for support. Back to resistance, back to support, back to resistance, back to support. Now, these zones were published Monday morning at 6:15 a.m. Eastern. Support to resistance, to support, to resistance, to support. That alone should be enough to change your trading forever. And when you become a passport holder, you'll have access to the weekly trading zones every Monday morning at 6:15 a.m. Eastern. Just ask yourself, if you're not a member, would this have helped me? Well, I guess only you can answer that. We're up against resistance, red and falling. Above that's the step line, above that's the BBC. Got a high, a lower high, a lower high, a lower high, a lower high. I'm sorry, a lower high, a lower high, a lower high, and a lower high. That is the definition of a downtrend. Now the Dow still has one more zone below. Now, based on those jobs numbers tomorrow, whether you believe them or not, the market's going to react to them based upon how they print. So, be flat, because it's a gamble. Let the numbers come out, good, bad, indifferent. Let the market react to those numbers. And then when the market resumes its normal ebb and flow, that's when you want to get back in. Remember, the goal isn't to trade 100 times a day. You simply need to get your goal for the day. If you're on the ES, that's 2 points. Gold or crude is 10 ticks. The Dow's 20 points. The Dow is the only one that doesn't have ticks. It just has points. Okay? Get your goal for the day. Have the discipline to put the mouse away. The 24/20 blueprint will walk you through the process of not only getting ready to go live, but once you go live, it will tell you when it's time to add your second contract. You only go live with one contract. You got to work the kinks out. Everybody always says, "Oh man, I was killing it in my demo account, but the second I went live, everything fell apart." No, the markets don't even know you exist. And nobody's trying to run your stops. Okay? What you have to ask yourself is, what did you do different? Because the market didn't do anything different. There's no central headquarters at the market where somebody goes, "Oh, hey, Dwayne went live today. Got to shake things up. We got to do things different." Whenever we encounter problems in life, sadly, one of the first things we do is try to figure out who to blame. we have to take responsibility for our actions in life and in the markets. We know when price runs up to a weekly zone, we expect resistance till proven otherwise. When price drops to a zone or drops to a zone, we expect support. Zones are an area just like fibs. They print an exact price point on your chart, but it's still an area. Okay? So from support, we've already ran up to resistance and come off. So if we take out the low of this candle right here, call it 42,175. There's not enough room to get your goal for the day. Not quite. Let it take out this low. Then you have room to run, but you got to look left to see where obstacles are going to come in. All right, the Russell, this is where we opened last night. Dropped below the BVC, hit the short target, consolidated, bounced up to the BVC, the pullback held. That sent us down to support. At the zone below, we spiked the zone. You got to look left to find out where the support came in. Support sends us back to resistance, back to support, back to resistance. And see this candle here? That's the 10 o'clock news this morning. Price opened here, ran up here, ran down here, and then ended up closing the 30-minute period basically where it opened. That's why we don't recommend trading news events. Okay? Most traders approach trading as a form of gambling. If you want to gamble, just go to Vegas. They got pretty cocktail waitresses, free alcohol. If you lose enough, you'll even go to a show or maybe get comped the hotel room. Right? Our methodology, our strategy is to remove the gambling factor so that we're making our decisions based upon the high degree of probability. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, back to support, over and over again and again. The NQ, we opened right at a weekly zone. Now, when price encounters a weekly zone, 70% of the time there will be consolidation. 20% of the time there'll be rejection. 10% of the time, the slice. Okay? That's when price slices through a zone on a 30-minute chart like it's not even there. Over here, we had a huge red candle all the way down to here. But as it ran out of steam, price reversed back to the zone it sliced through. And then what did it do? It continued in the direction of the slice. So only one of three things happens at a weekly zone. 70% of the time, consolidation. 20% of the time, rejection. 10% of the time, the slice. So we hit the short target, we came down, and as I mentioned earlier, we've seen this happen over and over this week. Buyers come in ahead of the previous day's low. And what do? They pushed us all the way up, almost to the zone at 21. at 21.24. The high was 21.13. But look where that 30-minute candle closed. Now this is off that 10 o'clock news. That's why I say don't trade the news. Let the news come out. Let the market absorb it. Let the market resume its normal flow so that you can know with a great deal of certainty what the next high probability move is. So the market found resistance here. News drove it through resistance. But as the normal ebb and flow return, resistance, which sent us below the BBC. And right here, this low, again, buyers came in ahead of this low. Pushed us back up to resistance. Now, what's the next high probability move? Probably 19,800 down to the lowest weekly zone. If you're still looking for the holy grail where you never have to get stopped out, either give it up or go find something else to do with your time and your treasure. Okay? Because there is no holy grail that will prevent you from being stopped out. Being stopped out is as much a part of life or much a part of trading as breathing is a part of life. Professional traders waste no time or treasure looking for something that can't exist. Why can't it exist? Because there's too many factors involved. So, look for the simple and the obvious. If we take out the low of this candle right here, there's plenty of room down to the low of this candle to get your goal for the day. Can't be that simple, can it? It can. You'll still get stopped out 20% or less of the time. At least that's what we've experienced over the last 17,960 Logic 247 alerts. Now, the top of this window, call it 19,9010 to 19,900 to 19,880. That's 30 points, not ticks. You only need 5 ticks to get your goal for the day with the NQ. Crude oil. Crude oil, we are above the highest weekly trading zone. This has to do with the conflict in the Mideast. Yesterday, we hit the zone, the highest zone, and found resistance. That's the zone published Monday morning. That sent us down. And look what happened right here. Just before we got to this low, buyers came in. That has been the theme of the week across all the markets. Everybody wants the price to go higher. There's a presidential election right around the corner. Okay? Nobody wants to see the markets go down. But despite the institutions with all of their money and the size they trade in, water seeks its own level, and so does the market. You can artificially inflate the market for a period of time or artificially depress the market for a period of time. Eventually, the market's going to go where the market's going to go. So it's really cool to know ahead of time where the market is most likely to go. Not 100% of the time, that's not possible. But over 17,960 alerts, we've managed to figure it out 20% or less on a weekly basis. What's happened here, the step line has crossed blue and climbing. This is the highest weekly zone. We made it all the way up to 73.95. Now when price goes from 72.35 to 73.35, that's $1,000 per contract traded. We actually, in this one candle, 71.93 to 73.95, that's a $2,000 per contract candle. Now, if you go left, way back, you'll find out why. Not going to show you because I want you to learn how to trade. Resistance sends us to support. And we put in a lower high, a sign of weakness. The step line has crossed blue and climbing. So where's price most likely to go from here? Once that step line crosses blue and climbing, price always reverts to the mean. Again, in our case, the mean is green. It's called the BVC, bull bear cross. Price gets above the green line, we're bullish. Price gets below the green line, we're bearish. Above the green line, bullish. So this pullback, you've got support times 2 at the moment. You got the highest weekly zone and the BVC, that's support times 2. If that fails to hold, then you got to start looking left for areas where the market may find support. Gold, here's where we opened last night, and we ran up to 83.4. So we missed the target by 6 ticks. Okay. Then blue and climbing turned to red and falling. We got below the BBC and we hit the short target. Now price travels in legs, leg, retrace, leg, retrace, leg. We hit the zone. We consolidated. See this low from yesterday? Right here. See this low here? Consolidated just below the zone. Then the 8:30 news came out. And the 10 o'clock news. And look where we are now. The early high last night was 83.4. This most recent high was 82.4. Now we're sitting on top of support. If price trades below, the next support is at the BVC. If price trades through the BVC, then the zone is 67/68. Silver opened at the zone, consolidated like it does 70% of the time. Blue and climbing turned to red and falling, and that took us right down to the short target, which was this low from yesterday. We spiked it down to this low, right here. Support to resistance, back to support, back to resistance, back to support. Then we get a leg and a retracement to support. And a leg that takes us to the zone where we consolidate, hit the long target, consolidate at the zone, putting in a lower high than yesterday. So what's most likely to happen now? Price will retrace back to the zone and the VBC. Support times 2 right there. Good news with silvers, you only need 2 pennies to get your goal for the day. On the euro, we opened right here last night and we dropped straight away to the short target. Now, look left, you'll find the reason for this support. Bounced us back to the VBC where we consolidated, and then we took another dive, and again looking left will help you answer that question. Right now, price is attempting to move higher, and it's supported by blue and climbing. Red and falling has turned to blue and climbing. But you got to keep in mind there's potential resistance right here, right here, right here, and then up here, the bearish cross. When you have a bearish cross, red line gets below the green line that leads to an extended move. The first time price revisits that area will almost always be good resistance. Keep that in mind. One last look at the daily chart. We're still sitting just above the 50% fib extension and the VBC. Now we touched the VBC yesterday, today. We now have red and falling overhead. The dynamics have changed. Okay, it began when the step line crossed. Where will we find ourselves this time tomorrow? Now, a lot of it has to do with the job numbers that come out tomorrow. Whether you believe them or don't believe them, that doesn't matter. It's how the market reacts to them. That's what matters. Okay? But if price gets to this area, well, first, the 38% fib extension should be good for a bounce. The 24% fib retracement should be good for a bounce. And then the bullish cross should be good for a bounce. Okay? So do I anticipate lower prices? Yes. But there's a lot of obstacles they got to overcome. Here's the 38% fib retracement. And here's the 50. Remember, when price, it looks like price hit the 50% fib retracement here. It hit that price, it hit that area. But at the time, that wasn't the 50% fib retracement. This did not become the 50% fib retracement until this new all-time historic high was put in, right here. Now, that could lead to a lot of head scratching. Market showed us a 50% fib retracement before it became a 50% fib retracement. You could grow old and go broke trying to figure out how and why the market does what it does. Or you could simply say, I understand how price flows because I've taken the time, I've shown up and done the work and learned. Now I have the freedom to simply trade what's in front of me. It's your choice. It's your trading business. If you want to be in the members only workshop tonight at 8 p.m. Eastern, you need to become a member. Go to mytradingiq.com. If you have questions, call 949-42-EMINI. Send an email to support@cfrn.net. 9 out of 10 new traders will fail because they don't have anyone to teach them how to trade. They buy books, they buy courses, they sign up with grumpy gurus, but there's no real teaching going on. We focus on teaching 2 hours every trading day. When you take our trial, you don't just get access to the live training room. You get access to everything we do around the clock. Keep in mind, the live trading room, that's just 2 hours out of a 23-hour trading day. Futures trade around the clock with a 1-hour break from 5 p.m. to 6 p.m. Eastern every trading day. Along with 2 hours of group trading in an interactive environment, you also get private one-on-one mentoring. Strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Stocks, futures, crypto, Forex, ETF, doesn't matter, because price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again, a never-ending cycle. Once you become a member, you'll get the Logic 247 alerts around the clock, concierge trade alerts when they're published every evening shortly after the Globex Open, the weekly trading zones Monday morning 6:15 a.m. Eastern, and you'll be able to attend the members only workshop that happens tonight at 8 p.m. Eastern. Go here, let the journey begin. Let's wrap it up with our good word for the day. For the last 2 days, we've talked about refusing to live in fear. When you're on a roll, stay on it. Here's part 3. Perfect love casts out fear. 1 John 4:18. When God says, fear not, which he says more than anything else in the entire Bible, he's basically telling you, you're going to have to deal with fear, but you can conquer it. You can act in spite of it. The Bible says, perfect love casts out fear. Sometimes we mistakenly think that Scripture means if we love God perfectly enough, we'll never be afraid. Nope. The only perfect love is God's love for you. And it's unconditional. Knowing that he always loves you, walks with you, defends you, supports you, and has promised to bless you in all that you do, that's what casts out your fear. And it does one more thing. It strengthens your faith. Hebrews 11:6 teaches us, without faith, it is impossible to please him. When you know that God is pleased with you, you begin to rise above your fears. When fear knocks on your door and finds you full of faith, it cannot enter. That's why you need to meditate continually on God's Word and let your conversation be filled with faith. If you're used to allowing your mind to go just wherever it pleases, meditating on God's Word will require making a new habit. Don't become discouraged if you discover you have good intentions, but many failures. In 2 Corinthians 5:7, the Bible says we walk by faith. How did you learn to walk? By getting up one more time than you fell down until you finally did it. When you set your mind to speaking fear-defying words of faith, the Holy Spirit will come to your aid and strengthen you. As one minister says, courage is not the absence of fear. It is progress in its presence. So just keep progressing, and you will get there. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.